Hi everyone, today let's talk about FedPal's comments. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So FedPal came out and said kind of what we've all been thinking, keeping rates too high for too long will unduly weaken the economy, and that is the concern, that is the hard landing thesis, which could absolutely be coming. Unemployment rate is above 4%, it's been that way for 2 months, but inflation rates really haven't come down too much during the last 5 months or so, and that's why we've seen a reduction in the amount of cuts that we're going to get this year. And if this continues to be the trend, we could see unemployment go higher from here, and that would start to slow down economic activity significantly more than what we've seen so far. And they mention it here, we've seen a cooling in the labor market over the past 2 years, and elevated inflation is not the only risk that we're seeing. He mentions they've seen inflation data that is encouraging after the surprise jump at the beginning of the year, and PCE prices were only 2.6% in May after peaking around 7% in June of 22. So there has absolutely been progress, but it has slowed significantly, and they say they need to see more good data to strengthen their confidence that inflation is moving towards that 2% target. Then you can see here, some Democrats started to pressure FedPal, saying that if the unemployment rate goes too high, you must act immediately to save American jobs. This is the second part of the dual mandate. Obviously, he is factoring in the jobs market and the economy as a whole, but there is concerns over a completely unnecessary recession, quote unquote. I think there's definitely an argument there that recessions are necessary, and I think this landing is going to be bumpier than most people think at the current point, which means markets are likely overvalued in that scenario. And we've mentioned many times recent data on the unemployment rate creeping higher, but the economy as a whole has decelerated, but is still expanding slowly. Moving over to fear and greed, 52 today, 52 was the previous close. Again, continuing flat here over the past couple. Chart says 53 at the previous close, so basically flat. And then you can see it here, really no change on these indicators. This put call ratio is super low now at 0.63. I don't know if I've ever seen it that low. We talked about this previous one was 0.64. And then this previous close here, 0.65. So previous dip lows, we are right there on the put call ratio. That tends to show a topping. And then we can see here, VIX did take a slight step higher. We'll take a look at that later on the charts. And then bonds didn't really move, 2.37. So we did see a slight step down into fear on safe haven demand, and then junk bonds still flat in regular greed. Moving over to seasonality, sideways choppy, still expecting that tomorrow for the 10th. Slight rally from here to there, and then after that, supposed to be quite bullish into the end of the week and into next week. So we'll see if that continues to hold. So far, it's held up quite well. Moving over to the earnings calendar, don't forget Pepsi, Progressive, Delta Airlines, all coming in on Thursday, July 11th. So earnings season is approaching quickly. Moving over to the economic calendar, FedPal speaking, talked about that already. 3-year note auction coming in about 0.25% lower on that. You like to see it. And then for tomorrow, FedPal speaking again, 10-year note auction, Atlanta Fed GDP numbers. And then for Thursday, this is the big one, CPI. So anything you hold into the close tomorrow is going to get affected by that CPI number. And then for expectations, everything is expected to be flat here for the core numbers. Headline 3.3 to 3.1, and then month over month for the headlines actually expected to step higher to 0.1 versus 0. So we'll see how that plays. Would like to see this step low. If it actually meets a 3.1, I think that's probably going to push markets higher if we come in at expectations or even potentially slightly better. And I think markets will probably hang in the current level until we get that data on Thursday. Moving over to Max Pain, current price $555.74, Max Pain $550. Look at this call strike though, $557 at 39,000. Total options only at 879,000. Put call ratio 3.4, which is a little bit higher than I think we saw on the Sunday video. So more options coming in, and they're on the put side, but just can't imagine we're going to be able to get past that 557, and we are already within striking distance of that. So we'll see how it goes. Right now, this says we have a little bit less than 0.5% of upside this week. Moving over to the chart, starting off with the S&Ps, you can see sideways choppy action, falling a little bit after hours, through a bunch of wicks to the downside, and we are below that 21 EMA after hours on the hourly. Haven't seen that in a while. You can see this straight up price action that we saw You can see it here on the daily chart, straight up 3 days, doji, 0.1 on the day, was positive just barely. You can see that momentum gaining steam here to the downside on the hourly. RSI dipped yesterday, RSI dipping lower here today, volume ramping on that selling. So starting to see a little bit of cracks on this move. We'll see how it plays. Momentum bullish, RSI still bullish. Upper trend resistance still at 561. I don't think we're going to get there, to be honest. And I would guess a test of the 552.50 level is more likely than a test of that upper level. Moving over to those tasty charts here, you can see we hit that upper ATR on that first candle of the day and the second candle, and then we pulled back to the 8 EMA, which is at 555.51. Bounce from that just a little bit. Momentum flipping to bearish here on that last candle of the day. ATR stops are flat, and that's sitting at 552.31. So starting to see just a little bit of hesitation in markets as we are at these extended levels. Moving over to the Qs, similar move, 0.09 to the upside. You can see tried to go higher, gave it back, rallied a little bit better into the close, wicked that highly traded zone at 496.34. Still have not made it, and you can see high of day was actually 500, so we did touch that level just for a moment early in the session. You can see we were right there and then gave it back. So hit a major psychological level today. We'll see if we can get back to that level. Could be an initial test, but similar, just like the SPY, you can see we're below that 921 VWAP. Could start to see a little bit of a breakdown to that 55 EMA, which is at 495.56. Moving over to the tasty charts, same thesis. You can see we hit that upper ATR band, pulled back to the 8 EMA, momentum bearish, ATR trailing stops 494.24. Seems like we're going to pull back to that zone. 21 EMA sitting there as well at 494.23. So right in that same zone, pull back to the mid range. Still very much an uptrend on these lower bands, but you can see flattening out on those upper bands. And once that starts to happen, that is when we start to see this kind of flattening out and a potential pullback to that lower band, which is sitting down at 489.32. Moving over to the Russell and the Dow, Russell was down 0.44 or 88 cents, again testing that 144 EMA sitting at 200.57. Momentum flat, RSI back to the SMA, still holding up, so it could still bounce from here. It is grinding higher slowly, not a ton of volume on the day, so nothing really crazy happening there. Dow down as well, 0.13 to the downside, still holding the level 392.44, so still a bullish thesis. This does look weaker on momentum, and you can see the RSI pulling back to that SMA. Decent volume on the day as well. The last 2 days have had higher volume at these relatively high prices, so that's not a great indicator either. Potentially looking for a pullback down to this trend line, which would be down around the 386.47 area. Moving over to stocks that moved, we got Corning Incorporated again, 3.76%. This is looking for a push to that trend line up around $52. Huge volume, huge momentum, big jump there for Corning. And then Intel, we got a big push over the last 3 days, 2.5% and then 6.15% and then another 1.77%. So Intel, huge fall here, and you can see it up around $50, fell down to 30, and look at this consolidation. Held the level very solid. You can see RSI rallying, push right to that next level, 34.66. Probably going to hold that level and push to 38. There's been a decent amount of talk here on Intel. This is a very long-term investment if you're trying to hold Intel for some gains. I do think they have a good thesis over the next couple years, but if you're trying to trade it for the short term, 34.66 up to 38.40 would be the trade that I'm looking for. Moving over to the Mag 7, 0.37 is what we got on the day. Not terrible. Made up for some of the losses yesterday. Still finding resistance at this trend here, 290.50. And we did get a step towards bearish on momentum. So this does start to look like more of a topping pattern than what we've seen over the past couple days. Big 4-day rally, down candle, inside candle, doji, resistance. So overall, still looks like a topping pattern at clear resistance. Moving over to Apple, continuing to grind higher. That is 6 days in a row of bullishness, 0.38 to the upside, momentum bullish, RSI bullish. And then look at the contrast here with Microsoft down 1.4%, hit that 9 EMA at 458.01, touched it to the penny, catching a little bit of a bounce there. Momentum breaking down, RSI breaking down. You can see big indicator move lower, RSI starting to trend a little bit lower. So definitely finding some resistance on Microsoft. Doesn't mean that we're going to get a change in trend or anything, but definitely a short-term pullback seems like it's in the cards here for Microsoft. Moving over to Tesla and NVIDIA. Tesla having another very strong day, 3.7%, huge volume, huge momentum, pushed right to that next level and touched it, which was 364.68, hit that level. You got trend resistance just above that, 268.13. This has been a massive move over the past 2 weeks or so. This could be an area where you find resistance though. This is a critical point. We'll see what happens here. If it breaks this zone, however, probably headed back to that 300 level. Is it going to go straight up from the 180s to 300? Doesn't seem possible, but Tesla can do some crazy things, and it's been on a massive run already. And then you got NVIDIA positive on the day, 2.48%. Found some support at the EMAs and VWAP. Momentum swinging to bullish. Hit the trend here. Maybe we can push to the next one up around 140.90. You have the big reversal candle, which topped out at 140.76. Let's go ahead and put a level at that wick high, which is pretty much in line with this trend. So that would be the price target I'm looking for. And if we break down from there, then you have a double top, and we'll see how that plays going forward on NVIDIA. Moving over to staples and discretionaries. Staples did what we thought, touched that 77.50 level, rejected from there, got followed through to the downside. Hope that 55 EMA holds at 76.88, but this is another lower low here, lower high, so you would expect this to break down to a lower low, which would be down around that 75.40 area in my opinion. Momentum rolling down, RSI rolling down, doesn't look great. And then we got discretionaries continuing this rally, broke the level, looking for 193.81 as the next resistance, and then some trend resistance above that, 195.51. This is still getting carried by Tesla, so as long as Tesla keeps going higher, so will discretionaries. And you can see that day here, 0.33 on the day, closing above the level for the first time. Moving over to financials and oil and gas. Financials finding a bounce here, 0.77 after 3 days in a row of bearishness, back above the level, 41.65, headed towards 42.22. Starting to see a little bit of a rally into their earnings that we have at the end of the week. That's interesting for financials, but I do think we'll see at least another dollar move there. And then looking at oil and gas, big move down, 0.91, getting very close to this critical support at 140.88. Think that's an interesting level. Got some trend support there as well from this consolidation. Also looks like a doubled bottom here, so see how this plays. I think this is an interesting zone. Could start to see a change in structure there on oil and gas in this area. And if we do see a push up, you could look for at least 148, 55 EMA at 148.99, and then if this zone breaks, potentially 154 would be back in the cards. So oil and gas, critical zone here. We'll see how it plays. Moving over to oil and copper. Oil's been down for 3 days, but critical support at 80.97. Need this zone to hold. It's been a really strong rally. You would expect a higher low here and another push up to that 86 area. Momentum breaking down, RSI breaking down, so we'll see how that plays. And then looking at copper here, had a big down move, found support around 433, rallied back up, touched that 4.69 level, found resistance there. Holding a higher low currently, momentum starting to break down, RSI looking okay. You would expect a higher low setup, maybe even a retest of that 21 EMA at 4.48. If it holds this level here, that could be bullish for the economy and bullish for equities. Copper is a bellwether, and I would like to see that zone hold and then potentially push back towards these recent highs around 511. Moving over to RIOT and Marathon, both down on the day. RIOT once again testing this area around 8.96. This is where it tends to find some support. If this 8.87 breaks, that's going to be quite bearish, momentum bearish, RSI bearish, so being patient here. But like I said, if it's going to bounce, probably should do it now. And then Marathon, 5 days in a row of bearishness, getting very close to that 1887 support. Just barely missed it on the day. And then you have trend support down at 1812. And then the 200 sitting at 1754. So critical zones here, need those to hold. If this starts to break down, could look for this trend around $17 or so. So either way, both of these look pretty bearish, but they're at zones of support. Moving over to 20 and 50-day breadth. Both of these pulled back. Did touch the level though, 51.75. That is what we expected. Just barely touched, and you can see that here, pulled back middle of the range. No structure there on 20-day breadth. Slow grinding price action with flat breadth is what we're seeing. And then 50-day, same thing. Touch the 21, flat and grinding. Slightly bearish momentum, slightly bearish RSI. So see how it plays. If this starts to break down tomorrow, which seems possible, that would fit with this thesis in breadth. Moving over to 200-day breadth, I wanted to mention this one here because you can see 3 days in a row of bearish movement here on 200-day breadth. Significantly more bearish, and you can see that close below the 200, something we have not seen on 200-day breadth for a very long time. Crossed above it here in November of 23, consolidated sideways action, and now we are back below it. So markets at all-time highs, grinding price action at resistance, and we're starting to see that 200-day breadth break down. Moving over to the dollar here on the hourly and the daily. We did get a bounce yesterday, got a continuation here today, hit that resistance, rejected from there. 2 bullish days in a row, momentum swinging to bullish. Long-term structure is bullish, so I would expect this to break higher. Potentially push to that 106.8 area, but we got to break 105.5 first, get back above the EMAs. We'll see how it plays. But right now, looking for at least a little bit of an upswing on the dollar. Moving over to the 2-year and the 10-year, both caught a little bit of a bounce over the last 2 days. And you can see 144 EMA holding support on the 10-year, higher low setup. I would expect this to break higher. If that happens, that's going to be bearish for markets, and it does seem likely that that's what's going to happen here. 2-year, on the other hand, is falling. Seems like we're headed back towards normalized conditions, and once that happens, that is going to be quite bearish for markets. Moving over to bonds, JNK, 2 down days in a row. 0.06, nothing crazy, still above all the EMAs and SMAs, could just be testing support here. And then TLT fell 0.44, found rejection at that 21 EMA, which is concerning. That is usually a setup that I like. 21 EMA holding as resistance or support. In this case, resistance, which could mean a little bit more downside, which does fit with this RSI thesis as well. Big move down, retest of the SMA, bigger move down potentially. So it looks like TLT might be falling and the 10-year yield could be going higher, at least in the short term. Moving over to volatility, move index continues to crater here, bearish momentum, bearish RSI. VIX, on the other hand, caught a small bounce off of that support here at 1.13%. And look at this RSI, held a higher low, breaking higher here. This has been grinding higher slowly. You can see low, higher low, higher low, and then potentially here, higher low again. So we'll see how this plays. Seems to be gaining a little bit of steam to the upside over the past 4 days. Moving over to my accounts, you can see IWM down 0.9, covered that with the call, sold another call for tomorrow for 38 cents. Might see a little bit of a bounce there. It was bouncing a little bit after hours, but it's flat now. And then you can see Qs, $200 on that. Managed to stay positive on the day, which was good. Outperformed a little bit. Only up 43 cents. I made a little bit more than that. And then positions for tomorrow, sold a 495 at 59 cents. It is up a little bit after hours here, just 30 or 40 cents. And then I sold a 491 for my covered call, rolled that out a little bit for $7.78, rallied a little bit more after that, but gave myself just a little bit of upward potential there for that Monday session. And then I still have that 500 call, which isn't a little bit more profit here today, covering that put that I have at 495 for tomorrow. So again, basically the same positions going into tomorrow that I had today, but looking a little bit closer for that potential breakdown. Let me know down in the comment section what you thought of FedPal's comments. Is it bullish or bearish for markets? Will he be able to land the economy softly? And what will he say tomorrow? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.